The fourth warning sign involves broader economic indicators that suggest we might be heading toward a recession. Housing markets are closely tied to overall economic health, and when the economy weakens, real estate typically follows. Let's examine some key economic indicators. Unemployment rates, while still relatively low, have been showing signs of increase in certain sectors. Unemployment and underemployment negatively impact the housing market by reducing the purchasing power of potential home buyers. Inflation remains a persistent concern, even though it's cooled from its peak levels. High inflation erodes purchasing power and forces central banks to maintain higher interest rates, which directly impacts mortgage rates and housing affordability. Corporate earnings have been mixed, with some companies reporting slower growth or declining profits. This often leads to layoffs and reduced hiring, which affects consumer confidence and spending power. When people are worried about job security, they're less likely to make major purchases like homes. The yield curve has also been inverted at various points, which historically has been a reliable predictor of recessions. When this happens, it signals that investors are worried about future economic growth and are demanding higher returns for longer-term investments. Consumer confidence surveys have shown increased pessimism about the economy's direction. When people feel uncertain about the future, they tend to delay major financial decisions, including home purchases. This reduction in demand can trigger price declines in real estate markets. Business investment has also been declining in some sectors, which typically leads to reduced job growth and lower wage increases. Without strong employment growth and rising wages, the housing market loses its foundation of qualified buyers. The combination of these factors creates a scenario where economic growth slows, unemployment rises, and consumer spending decreases. This trifecta typically leads to housing market corrections as demand evaporates and sellers are forced to reduce prices to attract the shrinking pool of qualified buyers.